Company overview. ZAMEFA is a key player in Zambia's manufacturing sector, specializing in copper and aluminum electrical conductors. It is a publicly listed company on the Lusaka Securities Exchange, and its financial reporting follows the International Financial Reporting Standards, that's IFRS. For this analysis, we'll focus on the company's financial statements for the years 2021, 2022, and 2023. Part 2. Quantitative Financial Analysis. Let's dig into the numbers. Profitability analysis. Here's a look at the company's ability to generate profit. Let's look at the company's profitability. The return on equity, that's ROE. That's net profit over total equity. In 2021, it was 27.6%. In 2022, it was negative 4.1%. And in 2023, it was 12.4%. The net profit margin, that's net profit over revenue. In 2021, it was 2.1%. In 2022, it was negative 0.4%. And in 2023, it was 1.1%. The gross margin, that's gross profit over revenue. In 2021, it was 5%. In 2022, it was 3.3%. And in 2023, it was 8%. The operating margin, that's operating profit over revenue. In 2021, it was 1.77%. In 2022, it was 0.6%. And in 2023, it was 4.8%. As you can see, the company experienced a loss in 2022, but a strong recovery in both gross and operating margins in 2023. The dew point analysis shows that the negative ROE in 2022 was directly caused by the negative net profit margin for that year. Liquidity and solvency analysis. Now, let's examine the company's ability to pay its debts. Let's analyze the ability of the company to pay its creditors. That's the liquidity ratio. The current ratio, total current assets over total current liabilities. In 2021, it was 1.1 times. In 2022, it was the same. And in 2023, it was the same. The quick ratio. In 2021, it was 0.72 times. In 2022, it was 0.71 times. And in 2023, it was 0.81 times. The debt to equity ratio. Total liabilities over total equity. In 2021, it was 3.1 times. In 2022, it was 2.6 times. And in 2023, it was 3 times. Efficiency and activity ratios. These ratios tell us how well the company is using its assets to generate revenue. The asset turnover ratio, that's revenue over total assets. In 2021, it was 3.2 times. In 2022, it was 3.1 times. And in 2023, it was 2.8 times. The asset turnover ratio is consistently high, suggesting strong operational efficiency in using its assets to generate revenue. Cash flow analysis. Let's analyze the cash flow statements. As we know, cash flow is the lifeblood of a company. Let's see the trends in operating, investing, and financing cash flows. The operating cash flow in 2021 was 2,533,000 kwacha. In 2022, it was 122,686,000 kwacha. And in 2023, it was 208,294,000 kwacha. The investing cash flow in 2021 was 750,000. In 2022, it was 1,489,000 kwacha. And in 2023, it was 9,855,000 kwacha. A significant positive trend is the improvement in operating cash flow, which has moved from a negative use of cash in 2021 to a strong positive cash generation in 2023. This is a very positive sign, as it indicates the company's core business is generating strong cash flows. Cash used in investing activities has remained low. Part 3. Earnings quality and red flags. The most significant red flag is the divergence between net income and operating cash flow. In 2021, ZAMEFA reported a positive net income but had a negative cash flow from operations. This suggests that earnings were driven by non-cash accruals rather than actual cash inflows. Another red flag is the volatility in the company's profitability, as shown by the net loss in 2022. While 2023 shows a strong recovery, a retirement package requires a stable, predictable returns, which this company has not demonstrated over the 3-year period. Part 4. IFRS versus US GAAP considerations. Because ZAMEFA uses IFRS, its financial statements have some key differences from companies that use US GAAP. One major difference is the treatment of property, plant, and equipment. IFRS allows for the revaluation of these assets to their fair value, while US GAAP generally prohibits this and requires them to be reported at historical cost. This can affect ratios such as the debt-to-equity ratio, as a revalued asset base may make the company appear to have less leverage than it truly does. Let's now make a final decision. So, should an investor place their 1,500,000 kwacha retirement package in ZAMEFA just like that? Well, based on our analysis, the final recommendation is to hold this investment. Yes, the company shows some positive signs, particularly the strong recovery in operational cash flow and improving profit margins in 2023. However, the most critical factors, financial risk and historical volatility, remain a concern. The company's high and volatile debt-to-equity ratio and its weak liquidity ratios present a significant risk. A retirement package requires stable, secure returns, which ZAMEFA cannot yet guarantee. What do we mean when we say a hold recommendation? It means the investor should keep the stock but wait for more evidence of long-term stability and a reduction in financial risk.